Today my guest is Brent McClure. Brent is a CFO for hire, essentially, and we're going to talk with him a little bit about how he can help you and your team improve your real estate holdings and your real estate business. But first, a quick reminder, if you like CREPN radio, we'd love to hear from you. You can do this. You can you can leave a comment, you can share the show, and don't forget you can subscribe. Also want to remind you that we also have a YouTube channel. If you'd like to watch or see the guest, you're certainly encouraged to go check out Commercial Real Estate Pro Network on the YouTube. All right. With that, let's welcome and introduce our guest. Again, I said my guest today is Brent McClure. Brent, welcome to CREPN Radio.
Oh, hi, Darren. Thank you so much for having me on today.
Thank you for coming on, and I'm glad to have you here. Before we jump into our talk today, if you could share a little bit about yourself for myself and the listeners to know a little bit more about you.
Oh, sure, no problem. So I'm from the South, as you might have already tapped into. I grew up in a family business. We had grocery business and a few real estate holdings. So I spent the first 20 years of my life, I like to say, in the family business, and I've spent the next 20 or 25 years of my life as a CPA, primarily lately focused on being a part-time or virtual CFO for companies. I have my own management consulting company. So in essence, I come in on a part-time basis or fractional basis. There's a few different terms that people like to throw around. To smaller companies that can't afford or don't want to, or maybe they don't need at this time, a full-time CFO. And so I can come in on a part-time basis for a fraction of the cost, yet they still get to tap into my knowledge and my experience and my background to help keep them or put them on the right track going forward. Got
it. And so essentially, if a investor or a again, most of the listeners here are real estate oriented. So if there's a real estate investor group, or perhaps there's an investor that's got some properties and they're looking either, I would assume it's more of like a growth and expand kind of a need that would kind of, or a plan that would kind of promote the need for somebody with your skill set to come in and help them plot a path. Is that kind of what you find?
That's true. That's certainly what I'm finding. And, if you think about it, if you own a property, that's really a business, right? Because you have revenue, you have expenses, you have tax returns, you have lenders, potentially you might even have shareholders or investors. So you have at least one business. Maybe you have multiple businesses underneath your property umbrella. And if it's growth that you're looking at, then certainly a part-time CFO would be a good place to look for someone like myself. Anywhere from risk management to just creating financial statements that make sense, the ability to turn those numbers into a story that you can share with investors or your husband or wife or the bank, lender development packages. I do a lot of those actually for businesses that need a new loan or looking at a new property. I can make a pretty nice, solid lender package to go out to the lenders and maybe bump them up to the first of the line, or at least get the attention of the lender, as well as cash flow analysis. For example, what's the new property what kind of cash flow are we looking at? And I know a lot of your listeners can probably do many of these things on their own, but eventually, if they're growing, there comes a point where their time is best used elsewhere.
Right.
Maybe it's in management, maybe it's in looking for the next deal, whatever their forte is, that's where their time's best used. And my time is best used as a CFO. So we can work together and really building the company together.
Got it. I wonder if maybe this is a good place to back up to just for a second, because
Sure.
I think there's all sorts of titles in corporations or entities, and president and vice president are probably two of the people I'm most familiar with, and then secretary and treasurer, and then you get into CFO and COO and all that. How does that? Can you, I guess, kind of describe a little bit about how a CFO fits into an organization, and what would the role of CFO be?
Yeah, that's a good question. Sometimes I gloss over that, but that's a great question. So the CFO stands for Chief Financial Officer. So generally, if you have an organization that's structured like you have a CEO or Chief Executive Officer, which is normally the president, and below that you would have a COO and CFO, Chief Operations Officer and Chief Financial Officer. And those two individuals work hand in hand. And maybe if you have a smaller company, you're president or you're the owner, you're doing all three of these things. But the COO in operations is just that. Everything in operations rolls up to them. And the same way with the CFO, everything finance rolls up to the CFO. So historically, CFOs were just your best accountant that you had, or your best CPA eventually was promoted to CFO. And everything was on a retroactive basis. Everything looked backwards. And in the last, say, 5 years, CFOs are starting to look forward, and they're dealing with leadership, strategy. They're involved with board meetings. Other than just presenting financials, they're actually a voice at the table and looking at, next acquisitions and strategies and how do we move the company forward, as opposed to just reporting numbers of what happened last week or last month or last year. So it's taken on a little bit different of a face of the CFO.
So more of I guess historically it was kind of a what has happened, and now it's developed into where are we going and how can we get there? Is that kind of what some forward thinking?
Yeah, that's exactly right. That's exactly right. So the what has happened part, you still have to have that for sure. Mm-hmm. So that's like your core CPA services, and a good CFO can take that information so they know that and they're very comfortable with that information. And they can use that to determine where are we going, what are we doing, how are we going to get there, by using what has happened plus their current knowledge, industry knowledge.
Got it.
Does that make sense?
Oh yeah. No, I get it. So I'm kind of curious. So in your experience, maybe you can provide an example. I'm kind of curious of what you found, and I would think that, one of the things that plagues a lot of small businesses that I find is that management is kind of a luxury, that the cost of management is seen as an expense without value sometimes. And so I'm kind of curious, how do you, can you give an example of somebody that you've worked with and possibly how you brought value to a client?
Sure. And you're exactly right. Sometimes in a smaller business, they can't afford or don't want management because the founder or business owner is actually running the business, or maybe sometimes the business is actually running them.
Right.
So there's no need or no spot for any other upper level management. I was just working with a client recently that had they were losing money on a lot of so they were a general contractor working on real estate upgrades, and they were actually losing money on a lot of the larger jobs, but couldn't really figure out why. And the smaller jobs were still making money, so they were hanging on to as many of those as they could, but they wanted to grow, and in order to grow, they felt like they needed to bid on and win and successfully complete much larger jobs, but they always came up short at the end. And so I came in and essentially, within a couple of days understood what was going on, and realized that the project managers were really managing those larger jobs with a notebook or a clipboard rather than using any type of software, right? So they had been accustomed to maybe a 1 month job or a 3 or 4 week job, that they had enough knowledge that they could run a 3 or 4 week job pretty easily from a clipboard or from their pocket. But when you ran into a 3 month job or a 4 month job, then you had lots of cost overruns. And so in analyzing those jobs, I could point out where those costs started to kick in and where the overruns were coming through. And I helped them implement essentially an app that they could use to help track costs that pushed and pulled from their accounting software, so that they could at any given moment see where they were on the job cost-wise and billing-wise, so that they could hopefully stay ahead of those cost overruns. Because if you don't see it, it's like you forget it's there, or you forget what happened 2 months ago, especially in today's fast-paced world. So that really helped them put a stop to their cost overruns, and now they've been doing a lot better on those longer running jobs.
No, I'm sure. I always laugh whenever the project you have a bid or an estimate and a time and a dollar amount, but it's merely an estimate until you get done and you find out that it's about 50% low and twice as long as you expected, kind of thing. So
yeah, exactly.
But if that's your job, and I would think that would be an important realization for any real estate owner, especially if you're in multifamily space where you've got to turn units, or you're buying a property to do a value add play, and you're going to be upgrading some units, is to have some hard numbers that you can point to that would be that you'd be able to analyze and see, if you're not hitting your mark, where can you tighten up, or where can you
Sure.
improve, kind of thing. So that makes a lot of sense. Let me ask you this, because I think that there's a couple of points in business, and one is the getting started, which is the try and find the deal. And again, I'm referring mostly to real estate, but even if you're starting you're a construction business and you've got no clients, but you've got the tools or the knowledge, you've got to go out and hustle and find the opportunities. Then there's the operations of the business. In real estate, you've got to manage, collect rents, pay expenses, keep the place full, staffing, whatever it might be, contractors, etc. And then the thing that I think that a lot of people in business don't remember is that the whole reason you got into business is so that you can get out of business eventually. That payday. And in real estate, I think it's much more of a recognized date. There's some sort of a timeline, a horizon that's set. If you're investing with a group of investors, you've got some sort of a timeline to dispose of or distribute, proceeds, etc. But I'm curious, from a value add proposition of bringing on somebody of your caliber, CFO, is there a point, if you consider the starting point, the operational point, or the sale point? Is there one of those that you would find or think that your services would be more valuable, or because I'm thinking like a lot of people, like when you start with real estate, you're probably just trying to get the deal,
Right.
and then you're probably running a while not knowing what you don't know and thinking it's all working until you find out otherwise. And then if you sell, you may leave some money on the table, kind of thing. So can you
Sure.
speak to that?
Sure. I think I would say if you're just getting started in real estate, maybe you're not ready for someone like me, because you're just looking for a deal to get done. Although I could certainly provide value, but maybe you don't have the resources at that time. You're just looking to do your first deal. The more value, or I can add more value after your first deal and you get into operations. That's where I could come in and really add some value, taking away not taking away the risk, but managing risk and taking away some of the headache from the property owners all the way through the sale. So I think the longer the business goes, the more value I can add especially from a growth standpoint, and especially if you have investors. So I've been in several, I feel like I'm in board meetings all the time, and investor meetings, and pushing out documents and quarterly reports and things that look a lot more professional than most of the business founders can produce. And like I said earlier, that's not where their time's most valuable. They don't need to sit in front of PowerPoint and try to create a presentation for their investors that has financials in it. That's my job.
Right.
I can do that quickly and easily.
Right. Trained professional.
Yeah.
Right? There you go. So another question that I've got here, if somebody's looking at, let's say they've got a business that's been operating, and they're, whether they're bringing in the next generation or they're looking to grow or whatever that may be, can you kind of give some sort of what they would expect to spend on somebody that's a virtual CFO like you, as opposed to what it might cost if they were looking to bring somebody on full time?
Sure. So full time, it depends is the short answer, but just speaking in generalities, a full time CFO in most markets, you're looking at a couple $100,000 at least, plus benefits, plus car allowances and expense allowances and things like that. It could easily go much higher than that. With the virtual CFO, my model runs more in the $2,000 to $5,000 a month range. I have some a little bit less, and I have some that are a little bit more, but my probably 80% mark is between $2,000 and $5,000 a month. I don't have a ton of clients, and I like it that way. Like, I don't have 1,000 clients.
Sure.
Because that way I can take care of those that I do have, and that's sort of how my model works. And I think you'll find that with most virtual CFOs, it's sort of a range, maybe in the 25 to 75,000 a year range to get a virtual CFO.
Got it. And I'm kind of curious, and we've kind of touched on this, but I'm kind of wondering if you could kind of speak a little bit more to it.
Yeah.
So somebody brings you in, they've got you on board, and you're helping them, see the numbers. And like you mentioned with the construction thing, you were able to identify, the problem and install a tool. Mm-hmm. I'm assuming that then improved the balance sheet to where they could, actually see that, where the costs were, and so you didn't have so many cost overruns.
Right.
Do you have is there any kind of a sense or a rule, or when you're looking to work with somebody, is there kind of a sense of a value proposition as far as what you would expect to find when somebody hires you to increase the value of a company based on, finding the numbers, I guess, if you will?
Sure. It depends on the business and their holdings. For your listeners, their holding or portfolio. But I pretty much always say I can pay for myself in the first year. So I'll cover myself with something. I can find something. We can improve profits or reduce overhead or save on interest rates or refinancing. I'll find a way to cover my cost.
There you go. No,
yeah.
I think that's the the cost benefit kind of analysis there that every owner is looking for, is that
right. Right.
If it's okay, yeah, I'm going to have this, but how am I going to pay for it? And if you're telling me that you can essentially pay for yourself, then that's good news.
Then it's all upside from there, right? So anything else I found, like the example I gave, that way covered my cost plus some. So that's all upside, anything after that. And that's how I like it. I like happy clients.
Yeah. Amen to that. So
yeah.
All right. Well, Brent, this has been informative, and I appreciate you taking the time. Is there something that
Yeah.
you would have liked me to ask that I didn't? I want to make sure I'm covering the ground here.
Yeah, no, I think that covered it. I just, I would urge your listeners if they have a property or two to certainly look at outsourcing some of their financial responsibilities, just to get it off their plate, if nothing else. Just the headache of it, because I know, small business owners, they lie awake at night worried about money, and so put some of that worry on someone else that is, trained in that area, um, to keep your business going.
I like it. Well, hey,
Yeah.
Brent, again, thanks for taking the time to talk. I've learned a bunch.
Yeah.
And
Yeah. Thanks for having me.
before we go, where can the listeners go to find out more about you?
Oh, okay. So I have a website that's brentmcclure.com. It explains who I am and all the services that are offered. And there's a blog associated with the website you can find easily. I'm on most of the major social medias at LBMCPA on Twitter, LinkedIn, Facebook. I have those pages. I like to push out some content there as well.
Got it. Got it. Well, and I'll list that in the show notes. So,
Okay, perfect.
all right. Well, hey, Brent, thanks again, and we'll do this again soon.
Yeah, awesome. Thank you so much.
All right. And for our listeners, if you like the show, share it with someone you know. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.